The strength of a nation's currency is based on the strength of that nation's economy. And the American economy is by far the strongest in the world. Accordingly, I have directed the Secretary of the Treasury to take the action necessary to defend the dollar against the speculators. I have directed Secretary Connally to suspend temporarily the convertibility of the dollar into gold or other reserve assets, except in amounts and conditions determined to be in the interest of monetary stability and in the best interest of the United States.
August 15th, 1971 will stand as an important event in economic history for many, many generations. In fact, hundreds of years from now, people will look back to that day.
Thank you for joining my classroom, my series here on School about money, how money became worthless, inflation, the dollar, why everything is going up and why you're struggling, your family's struggling, and how Bitcoin is the answer. This is going to be a series of things. What I've basically done is there's so much great work out there. I've curated it. I'm taking the best excerpts so people don't have hours and hours and hours to spend, but there's so much great information that was so professionally done out there that exists that I'm putting it together in a way to really drive the point home and give you the most important parts that's easily digestible so you can see what's going on. So we're going to go through this. We're going to have this clip here. I'm going to have some commentary over it. I can't speak today. Also going to be sharing this on YouTube and socials and Rumbles and things of that nature. So please look at the links below to join the Skool community if you haven't already done so. It is free as of right now, as of this recording. Because once I get to a certain 20, 25 or so, it will become a paid membership and a lot of other great things of value that are coming. So if you see this early, take advantage and let's continue.
The Bretton Woods system was created after the Second World War at the Bretton Woods Conference in New Hampshire. And rather than using gold as the means of exchange between countries, as was the case under the old gold standard, the dollar was going to be used. The dollar was chosen because back then it was as good as gold.
Under this new system, countries agreed to fix their currencies to the US dollar, and the US dollar would be tied to gold at a price of $35 per ounce. This meant that countries around the world could trade their currencies for US dollars, which they could then exchange for gold. This created a system where all currencies were essentially backed by gold. To avoid the logistics of shipping physical gold across the world, when countries did exchange their currencies for gold, it was usually stored safely in the US. With all the new spending programs in the United States, other countries became concerned that the US was spending more money than it had gold reserves. They started exchanging their dollars for gold and demanded physical delivery, as they felt that there were more dollars being printed than the gold that backed it. To prevent this outflow of gold from American vaults, President Nixon called for an emergency suspension of the gold convertibility system.
I have directed the Secretary of the Treasury to take the action necessary to defend the dollar against the speculators. I have directed Secretary Connally to suspend temporarily the convertibility of the dollar into gold or other reserve assets.
All of the problems that
What's really funny is that he's going to defend the dollar against the speculators, yet the U.S. government was the one speculating because we started printing more money than we had gold to back it. And it was temporarily suspended in 1971. It's 54 years later, and we're still waiting for them to temporarily lift that restriction. We will always be on a fiat system, which you're going to learn a lot more, and how dangerous it is and why you're struggling, why money is struggling, why everything gets more expensive, and why, again, Bitcoin is the answer, more than just an investment, more than speculation, more than number go up. That's not the most important thing. It's great, but it's not the most important thing.
we see today in the monetary system are a direct result of the decision made in August 15th, 1971, to abandon a fixed link back to gold. What gold did is it provided discipline on governments, provided discipline on government spending.
Under the old system, if you ran a budget deficit, then what would happen is gold would flow out of your country until there was a balance again. Well, without any gold backing, then countries ran perpetual deficits. So if you look at, for example, this country, from 1971 on, the U.S. has never run a surplus. Ever since we went off the gold standard, it's just been perpetual stimulus. Good times, bad times, always run a deficit.
By removing the link between gold and the US dollar, President Nixon created a system where all currencies were backed by nothing. This is what is known as a fiat currency.
Fiat currency is currency that's backed by nothing except government promises. The word fiat is a Latin word, and it basically means currency that's circulating by force. If people have confidence in that currency, and if there's enough government force, that will enable the currency to circulate for a period of time until people lose confidence in the currency.
There is no nation on this planet that currently uses money. We all use currency. There will come a day when everybody knows the difference.
Money is a medium of exchange, and the way it has evolved is that it's always something of intrinsic value until the modern age, when the politicians say, well, we don't need anything of intrinsic value anymore. All we need is political decree. We can say this is money, this piece of paper is money. Now money has a new characteristic. But underneath it all, there's this same concept in place that nobody ever seems to challenge, and that is that governments have a right to declare something of no value to be money, and you must accept it. That's really the problem, and it's still the problem today. It's destroying the economies of the world.
With currencies no longer backed by anything real or tangible, their value was measured only in relation to each other. And because countries with relatively weak currencies can make products cheaply, countries devalue their own currencies to make them desirable trading partners.
And this is exactly, forget about politics, forget anything else, why the tariffs are happening today in 2025 as I'm recording this, and why the whole issue with China and why everything is made in China. They devalue their own currency, which you're going to learn a lot more here now, like a lot of other countries do, so they can keep their currency cheap, so their products stay cheap, so they can make and manufacture, and we import all of that with our dollars. And this is a big, big problem with us being the world reserve currency, and why this debt doom loop that we're in is continuing. So please, I hope you're paying attention. I hope you're really watching this and you're really gathering and seeing, and your eyes are opening to the problems globally with money and monetary and fiat.
Every paper currency measures itself against the dollar. So if the dollar goes down, the other central banks respond to that, and they try and intervene in the foreign exchange markets to ensure that the impact doesn't hit their domestic economies.
What is a Ponzi scheme? A Ponzi scheme is a fraudulent investment scheme that promises high returns for investors with little or no risk. Sounds too good to be true, right? That's because it is. In a legitimate investment scheme, the money invested is used to build wealth, typically through low-risk ventures like stock or real estate portfolios. Over time, this generates enough income to pay the investor back their initial investment plus some profit. A Ponzi scheme, on the other hand, promises massive returns quickly. How does it accomplish this? Instead of using the money invested to build wealth, a Ponzi scheme simply brings in more investors to pay off the previous investors. And because these new investors have also been promised large returns, the scheme must then find an even bigger group of investors to pay them off. All the while, the creators of the scheme are skimming cash from each group of investors. Because a Ponzi scheme doesn't generate any wealth itself, it must constantly bring in larger and larger groups of investors to keep functioning. Eventually, no more new investors can be found, or large numbers of previous investors all cash out at the same time, and the scheme collapses in on itself. By this time, the perpetrators of the scheme have siphoned off tremendous amounts of money for themselves, while the investors are left out of pocket and out of luck. Without a fixed link to gold, the U.S. Treasury has been able to borrow and spend as much money as it wanted. When the U.S. government needs money, it takes out a loan with the Federal Reserve. The Federal Reserve prints the currency required for the loan, and in return receives an IOU from the U.S. Treasury. These IOUs are called government bonds. With the money provided from these loans, or bonds, the U.S. government pays its bills and obligations. Meanwhile, the U.S. Treasury and the Federal Reserve work closely together to sell these bonds at auction, where foreign central banks, pension funds, and even individuals buy these U.S. government loans, And why wouldn't they? Loaning money to the U.S. government is virtually a risk-free investment. But if the loans are spent on bills and paying off previous loans, where does the government get the money to pay back the current loan and the interest that is charged on it? Is investing in a U.S. government bond simply one small part in a giant Ponzi scheme?
The Federal Reserve System is definitely a Ponzi scheme. There's no question about it. They go through the appearance of lending money to the governments, and the governments agree to pay back the money plus interest. And so this money comes into being. They create it just for that purpose. They give it to the governments. Didn't exist before that, you understand. Central banks just make it out of nothing and click a few keys on a keyboard of a computer, and the Treasury of the United States government now has another $1 trillion that it can spend. That's where that money came from. And so that creates a liability on the part of the federal government to pay it back, plus interest. Now think about that, plus interest. Well, when it comes time to pay it back, plus the interest, they can't pay it back, and they certainly can't pay it back plus interest too. So what they do is they borrow more to cover the original loan plus the interest, and then by that time Congress wants more money anyway. So the debt just keeps going up and up and up and up.
Under the current monetary system.
So understand something too, and I think I'll try to find a portion. I don't know if it's in this or not. The Federal Reserve is not federal, and it doesn't reserve anything. It is a private corporation. It is not a government. It has this whole seal, the United States Federal Reserve. This is a private organization with private shareholders, and it pays an annual dividend to those private shareholders. You can Google it. You can ask any kind of AI. You can go to Wikipedia. They are a private entity, like, and JP Morgan, all those banks are basically their customers. So they have to make a return for their customers, and they print money. They control the money of the U.S. that has to always pay it back with interest. So understand this. They reserve nothing. They make money and print it out of thin air, and they are not even a federal government institution. They are a private organization.
We borrow all of our currency into existence, and we promise to pay it back plus interest. If you borrow the very first dollar into existence, and that's the only dollar that exists on the planet, but you promise to pay it back plus another dollar's worth of interest, where do you get the second dollar? The answer is you have to borrow that. It's a Ponzi scheme because you can never pay it off. It always requires that we go deeper into debt.
Since 1971, the United States has been running trade deficits with the rest of the world, meaning we've been buying a lot more products from the rest of the world than they have been buying from us.
Exactly.
The Japanese and Koreans sell us cars and electronics. The Middle East sells us oil. And the Chinese sell us seemingly everything on our Walmart shelves. The U.S. pays for these products with U.S. dollars, and everyone is happy. But if countries were to convert these U.S. dollar profits back into their own currencies would rise in value, making their economies less desirable to trade with. Instead, countries invest their dollar profits by buying U.S. government bonds. So countries around the world sell their goods to the U.S. in exchange for U.S. dollars, which have been borrowed through the Federal Reserve, creating IOUs. And countries then loan their U.S. dollar profits back to the U.S. by buying more IOUs. The money from these loans is spent on paying government expenses, as well as paying back previous IOUs. But in order to do this, larger and larger loans must be made in order to pay back the principal and the interest. By paying back old loans with new and larger loans, it would appear as if the entire world has been investing their hard-earned money into a Ponzi scheme of epic proportions.
Isn't that crazy? Do you understand and just see how the entire monetary system globally works? If people actually knew this, they'd be all running to the bank and taking all their money out. But the money in the bank's not even yours. If you look it up, it's theirs. Once you deposit that money, it's their money. That's their asset. Your account balance is an obligation to them. It is a debit to them. So it's not an asset. You actually don't own their money. You gave it to them. They now own it. So read that and educate yourself on that.
This business of creating money for federal governments and national governments around the world, if they didn't keep creating new money in larger and larger amounts, the whole thing would crash, because that's where the money comes from to pay off the previous loans. It's the new loans. So that's why it's a Ponzi scheme. It's a classic Ponzi scheme.
Remember when a chocolate bar cost a quarter? When you could fill your car up for $5 and feed a family of 6 for $35 a week? Whatever happened to those days? Without anything tangible backing currencies, governments could borrow and print as much currency as it wanted. This has gradually led to the value of our currency being eroded.
With the creation of all this money, that dilutes the value of all of the dollars that were out there before, so that the purchasing power of the dollar gets crowded down, and we used to be able to buy a gallon of gas for 31 cents. Now it's hitting around $5.
The average guy in the street is affected by inflation because of the loss of purchasing power. And as a consequence, his standard of living is declining if he can't keep up with the inflation rate.
I'm going to end this video here on a couple of things. Number one, look at the U.S. debt clock right now. We are over $37 trillion and counting in debt. 108,000 per citizen, 300,000 in debt per taxpayer. Spending, U.S. federal spending over $7 trillion annually. We don't bring in enough money in taxes, and they keep saying tax. Taxing is not the problem. Spending and this debt spiral and this debt fiat system is the problem. You can never get enough taxes. So if you're someone who thinks taxes is the answer, if you're in that party that believes that, it is not the answer. It will not solve anything. We don't even bring in enough taxes to pay our bills. It doesn't even cover. Okay, we always borrow the money. We always run into this system. The taxes are an illusion to keep you in control, and the only reason why people are taxed is to control inflation. The next video is going to be about inflation, and I want to show one last thing that's going to go into the next video. I'm going to end this one, is the value of the dollar. So since 1913, when the Federal Reserve started, the value of a dollar then to a value of a dollar today, it has gone up in inflation, cumulative 3,163%. Average inflation 3.16. $1 in 1913, you would need $32.63 today to buy the same you could buy for one single dollar in 1913. This is the rate of inflation since 1913 and since the Federal Reserve went into existence. This is the buying power of the US dollar over time since the Federal Reserve has gone into existence. Look at this. This is insane, these numbers and these amounts here. There's one more thing here I was going to show. Where is it? Yeah, basically the same thing. So if you wanted to have the same buying power, you would have to have made through investments, real estate, stock market, whatever, you would have had to made over 3,000% return just to keep up with the rate of inflation and how much your money was being debased and losing value over time. So let all of this sink in and understand why Bitcoin was created, why the white paper was released in 2008, why the Genesis block started after the great financial crisis that really has made this way worse. And I don't think we ever can recover since then, no matter what illusions they try to show us out there. So the next one's going to be about inflation. I hope you enjoyed this. Please like and subscribe if you've seen this on social media. Please tell other people about this. Tell people about the Skool community, about this class and this classroom and this series that I'm doing here. I'm telling you, you're going to get so much value of me taking the time to break these down and curate the best parts to really help you understand what's going on. I hope you got a great education. Until next time, see you then.